Do you think that you've got what it takes to beat the street? All this week, we are profiling 5 of America's top-performing fund managers this year as ranked by Morningstar, and thanks to them for running the data. And today, we kick things off with the Barron Discovery Fund, the ticker BDFFX. The fund primarily invests in smaller-sized U.S. companies. Get this, up 24% this year. More than the Russell 2000 is up only 13%. Joining us now is Randy Gwitrzman. He is portfolio manager of that fund and joins us now. Congratulations. You're one of the top 10 or 15 fund managers out of thousands this year.
Thanks, Brian.
Appreciate you joining us so early.
It's great being here.
All right, so small caps we know have done well, but your top holdings are names that are probably unfamiliar to almost everybody. What is different about your strategy? Is it that you take big bets on a fewer number of companies?
No, actually, well, we do have a small portfolio, 60 stocks versus the thousands potentially in Russell 2000. But what we do is we concentrate on deep fundamental research and make sure that the companies that we find are the best of the best, and that we do our work to make sure that they continue to be the best.
Define the best.
So these are
what
companies,
do you look at?
Yeah, we look at top quality management. It's really the first thing that we want to find. We want to find managers that primarily guys that we might even know from other companies before, but people who are highly qualified, who can have a great business plan, great strategy, and importantly, a business that's protected. So it can deal with the ups and downs.
Okay, a lot of CEOs and executives watch this show. They're up early, so they may want to cover their ears because I'm going to ask a dirty little question, which is this. In the age of ETFs, does management still matter?
Well, I hope it does, because that's my job, and we think it does. So Barron's been around over 30 years, and what we've done is we found that you can find differentiated companies, particularly in small and mid-cap, because people don't pay as much attention. And when things go wrong...
And fewer analysts, by the way. These MiFID laws in Europe are going to see the number of analysts probably continue to decline.
We think, actually, that's a good point, that the inefficiencies continue, and they get bigger and bigger as we go along. And
do you want companies that are lesser covered by analysts?
We love that. We love companies that are a little, underfollowed. We say, you never heard of these companies, but you will. And the idea is to find that little company that eventually becomes an apple.
Intersect ENT.
Great.
I'd like to sit here and say, yeah, I know them. Never heard of them.
Yeah, that's a perfect example. It's a med tech company. They make stents that are embedded with a medication that goes into your sinuses post-surgery.
Been a rough ride the last couple months.
Yeah, this is an interesting one, because they've got what we think is a $3 billion market opportunity, $100 million in revenues. The base product is doing okay, and they just introduced a new product which is just about to get reimbursement. We think that happens in January 2019. So in the early days, you get some bumpy rides sometimes as we go through that process. So
you like the price going down now because you're buying for the years out if they get that insurance reimbursement.
Yeah, we believe that's going to happen. It's pretty likely. The medical studies are really good, and this product could be a barn burner. It's a $1.3 billion potential market opportunity just for this new product. CareDx,
CDNA, another one, medical, smaller cap, mid-cap medical device company.
Very interesting. This is a technology that does diagnostics for when you need a transplant, an organ transplant. They have coverage at 80% of the major organ donor transplant centers in the U.S. They just introduced a new product. Now, their total opportunity is $2.6 billion, we think. The new opportunity they have in kidney transplant is $2 billion on its own. This product just launched in Q3 17, and if you saw the last quarter...
Is that 3 plus 2, or is that 2 out of the 3?
Oh, sorry, in the third quarter of 17. And what they did was they started marketing. They had great clinical results as well. And last quarter, you would have seen that the sales have done just absolutely terrific.
And those are two companies that have little to no sell-side analyst research.
Yeah, these are $600, $800 million market cap type companies. So really under the radar, and things that we think.
So you're not, you're not getting the research notes, upgrade this, downgrade that. You're doing this from the bottom up yourself with your team.
We do bottom up, and obviously we talk to the street because there's some really smart guys doing great background work as well. And we use every resource available to us.
Qualys.
Yeah.
Cybersecurity, obviously, super hot topic.
Huge,
but what you hear from the bears, man, there's a lot of players out there.
Yes.
Is it going to become commoditized?
No, it's a great question, because in cybersecurity, it's not a one-size-fits-all. It's a very niche-y type of business. So what we've done is we've not done a lot of work on the firewall side. We're more interested in the niche-y endpoint and kind of holistic overview companies that can kind of tie the whole network together and see where all the problems are in the network. So Qualys does endpoint protection. They do something called vulnerability management and policy compliance. Make sure everything's up to date and working properly. But they scan millions and millions of endpoints at once. And they have a new active agent technology. It's very cool, which actually can incrementally update. So you don't have to scan the whole network every time. It incrementally updates it. And then on top of that agent technology, you can leverage new products. So they're doing really well. 35% cash flow margins, top line growing about 20%. And we think this is a long-term growth.
Wow, interesting stuff.
Story.
So, listen, obviously you're finding names that are outperforming the index. We just showed the chart comparison. But you also, I'm sure, want the overall markets to do well. That rising tide will lift all boats.
Sure.
So as a guy that gets obviously deep into certain companies, how much of a macro view do you have? You think we're still going to see continued, the anniversary of the bull market is on Wednesday.
Yeah.
9.5-year bull market will be the longest of all time. Are you bullish longer term still?
Yeah, we are. I mean, look, overall, we think the United States is just a terrific economy. We've got amazing innovation. We're going to have bumps in the road. The fund is a beta of one, so we're going to move up and down a little bit with the market, and we're long only. However, if you follow companies that have terrific cash flow growth over a period of time, and like I was mentioning with all these companies, they have these terrific open-ended growth opportunities that can grow 20% a year. We're going to do just fine.